Just gonna wait probably like 30 more seconds for people to join in.
Okay.
Great. So for everybody that's joined in right now, you want to stay tuned in because we have James here today, and he's a 1031 expert. He's going to tell us all about 1031 exchanges. James, I've written down some questions here, and we've got about 15, 20 minutes. So if you don't mind, I'll just get straight to it.
Yeah, let's do it.
Why don't you just do like a quick introduction just so people know your qualifications and all that. And
yeah, sure. So obviously my name is James Callejas, and I am known as a qualified intermediary, and I have been doing this sort of business since 1998. So this would be year 26, and I have helped many, 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 many people defer their capital gains tax, reinvest into superior pieces of investment property, all taking the pain out of the gain. That has been my job for a real long, probably longer than you've been alive, my friend. And I really enjoy helping people create a wealth empire through real estate, and that's exactly what I do. I'm in Walnut Creek. I'm born and raised San Francisco, and so I'm very local Bay Area person.
I look a lot younger than what I look.
Well, you're younger than me, so anything you got, I would trade with.
So let's start off with, for people that are not familiar with what a 1031 exchange is, can you just tell us what that is? What
Sure.
basic definition of 1031 exchange?
When you hear 1031 exchange, it's just the Internal Revenue Code, and that's the number. But what it means is it is an internal revenue code that allows you to sell investment property and buy investment property. And if you follow the guidelines behind that code, you'll be in a position to, when you sell, pay absolutely zero in capital gains tax to anybody. States, feds, healthcare, depreciation, recapture, all of it can be magically deferred.
And this is for investment properties, correct?
This is only for investment property. So there are certain properties that it does not work for, and a lot of properties that it does work for.
Okay, let's dive into that. What properties qualify for a 1031 exchange?
So I'll start with the ones that don't qualify, so people know right off the bat, okay, so this one doesn't work for that. Number one is the primary residence. So if it's your principal residence, primary residence, and you've lived there 2 out of the last 5 years, there is another section code 121, that allows you as a single person to keep $250,000 of your gain tax-free, and as a married couple, $500 of your gain tax-free. Now, there are certain scenarios where the primary residence will qualify for a 1031 exchange if it is a mixed-use property, meaning what if there's an ADU on the property that they're renting? Or what if they rent out rooms? Or what if they run their business out of their house and claim it on their taxes? Or what if they live like on a farm and they run the farm, that's investment, and they live there as well, and there's a primary dwelling there, or a vineyard, or there are so many different examples like duplex. You live in one unit, rent the other one out. So in a scenario like that, you can actually take advantage of both codes. But if it is just your primary residence with no investment component to it whatsoever, it does not qualify for a 1031 exchange. The second piece of real property that doesn't qualify for a 1031 exchange is the second home. And get this, you sell second homes, you pay taxes. There is no loophole. The primary got the 250, 500. The investment has the 1031 exchange. The second home has the do your patriotic duty. So it is really easy to convert a second home to investment property. All you have to do is rent it out 2 weeks out of the year, 14 days out of the year, and not use it for personal use more than 14 days out of the year for 2 years. Then you can magically sell it and do a 1031 exchange. Otherwise, a second home doesn't qualify and you're paying capital gains tax. And the third piece of real property that doesn't qualify for a 1031 exchange is the flipper. So if you buy a property, fix it, and look to sell it, it doesn't work. It's going to be considered inventory. What should you do to make it work? Buy it, fix it, rent it. How long do you rent it? Really up to the tax advisor, but they're either going to say 1 or 2 years, depending upon how aggressive or conservative they are. Those are the only three pieces of real property that don't qualify for a 1031 exchange. So when you're looking at bare land, it qualifies. Condo rental qualifies. Townhouse rental qualifies. Single family home rental qualifies. Duplex, triplex, 4-unit, 10-unit, 30-unit, 100-unit, office building, retail shopping mall, warehouse, hospitality. So hotels, motels, Holiday Inn, like the song says. All that stuff qualifies for a 1031 exchange. And there's like some weird things out there that most people don't know qualifies for a 1031 exchange that they didn't even know was real property. My advice to anyone out there is just call me up. Let me know if you're not certain if it does or it doesn't qualify for a 1031 exchange. And it's a free phone call to determine whether or not you can do it or not.
That bare land, I didn't know that you could do a 1031 exchange with the bare land.
Well, let me ask you this. If you bought bare land in 1960 in San Francisco, what would we call you today besides old?
I don't know what.
Rich. We would call you rich because in 1960, it wasn't worth that much. Well, probably was a lot back then. But right now, if you were to sell bare land in San Francisco, in Walnut Creek, in Danville, anywhere in the Bay Area, it made all kinds of money. So you had bare land, it appreciated in value, it definitely qualifies. And a lot of people don't think that it does qualify. So if you're sitting on bare land, you're missing out. You can sell it and not pay taxes and reinvest into a vehicle that provides income.
Wow, very interesting. And then for the second home, you said you all you have to do is rent it out 2 weeks out of the year.
14 days is the magic number. You do that for 2 years and do not use it for personal use more than 14 days out of the year each year for 2 years, and then sell it 1031 exchange into something else.
Okay, so rent it out for at least 2 weeks out of the year, and then don't use it for personal use for more than 2 weeks.
Correct.
For 2 years.
For 2 years.
Gotcha. And then for the ADU, you mentioned that if you have an ADU and you're renting it out, it qualifies for a 1031.
Yeah. So say you have an ADU, you have a casita, you have an in-law, you rent out rooms. You're claiming the depreciation on your tax returns. Who knows what the percentage is, because sometimes you're renting out more than one room. Sometimes the ADU is huge. You know, the in-law could be the whole downstairs. There's all kinds of examples, but whatever percentage that is, that's the percentage that you exchange. And the other percentage that you're living in, that's the one that would be used towards the primary residence exclusion.
Gotcha. Okay, that makes sense. Awesome. So I know with 1031 exchange, there are some important timelines that they need to pretty much meet, right? And that's one of them is finding a replacement property or identifying a replacement property, and the other one is closing on that property. Can you talk talk
absolutely.
about timelines?
This is the most difficult and challenging part of the 1031 exchange, is getting things done in a timely manner. So I would first recommend that anybody who's considering doing a 1031 exchange, call me before you list the property to make sure it qualifies. Then put the property on the market. Then you'll eventually accept an offer and open up escrow. Then call me again and say, James, we're in contract. What do we do next? We need to set up the 1031 exchange account before escrow closes, or there is no 1031 exchange and you're a taxpayer. You can't touch money. So at the close of escrow, the proceeds from the sale after closing costs or loans are paid off will go into the 1031 exchange account, and that actually starts the clock. That close date is the first date, and you will have 45 calendar days to let us know in writing exactly what you are going to purchase. And you got to be really specific when you identify. So if it's not 100% of the property, you got to give us the percentage. It's got to be the exact property address that you identify, and you have to do that within that 45-day window. And if you don't, and you identify nothing, on day 46, we send the money back to you and it fails. So in the 45 days you identify, from day 45, you have an additional 135 days to close on what you identify. So you have a total of 180 days to get it done. But to me, the first 45 are critical. And that's why I don't sell my property without a game plan in place that I'm going to execute as quickly as possible.
What are those? So exactly what kind of documents do we need for those 45 days finding a replacement
We'll,
property?
we'll send the documents out, and it's called a property identification statement where you can list the properties that you're looking to buy. We'll make it very easy. The hard part is finding the property. We'll guide you through the form. So don't worry about the exact documents. That's our responsibility to help you through that. The most challenging part, in my opinion, is finding that replacement property in that 45-day window. And that's why you attack what you're going to buy prior to listing the property, so you can determine, okay, how much inventory is available? Do I have a plan A, B, and C? Because I need to make this happen quick, because I can't fail, because I'm not paying Uncle Sam, Uncle Gavin, Uncle Barack, and Uncle everybody else taxes. I have to make this work.
Gotcha. So do you need to be in contract within 45 days?
You don't. But then again, what if you're not in contract and you just give me a list, and then on day 50, they're like, oh, no, somebody else bought it. You can't change the list. So you don't have to be in contract, but I'd highly recommend you're in contract.
Oh, wow. Okay. All right. So yeah, that is very important then, determining a replacement property within the 45 days.
I think it's critical. Absolutely.
Gotcha. And we've talked about what properties qualify, and what about the different rules for identifying replacement properties?
So, it's funny you asked that, because I've had people just like send me over a huge list of like 100 properties. I'm like, wait a minute, you can't do that. You have to follow one of the 3 rules. And here are the 3 rules. The first rule is the 3 property rule. And this rule says that within the 45-day window, you can identify up to 3 properties, and there is no limit on the value of the properties. The limit is you can only identify 3. And quite honestly, you could change that list as often as you want in the 45-day period. But come midnight, day 45, whatever 3 you identify, those are the only 3 you can move forward on. So that's the 3 property rule. And that's usually used for most clients that are looking to buy 1 property, maybe 2, but usually 1 to 2 properties. But a lot of the time, especially in California, when people are selling in Central Contra Costa County, in the immediate Bay Area, and all these counties where they make massive money, they sometimes want to leave the state or buy maybe in the Central Valley or in other areas where you can get more bang for your buck, depending upon what you're looking to buy. They want to buy more than 3 properties. They want to buy like 10, and you can do that in a 1031 exchange. So if you're looking to buy multiple smaller properties, you would use the second rule. The second rule is called the 200% rule. The 200% rule is as follows. Look at the gross sales price of what you sold. Let's just say it's $1 million. 200% of $1 million is $2 million. That means I can identify a total of $2 million worth of real estate. So if I'm looking to buy $200,000 properties, I could identify a total of 10. Don't need to close on all 10. Want to close on at least 5 to get to $1 million, my target price. But this gives me the flexibility to buy a bunch of smaller properties and diversify my real estate portfolio in many different areas. And many clients like to do that. So you're either going to be using the 3 property rule or the 200% rule. Or if you really, really, really like taking a gamble, then you'll use the 3rd rule. The 3rd rule is called the 95% exception. This is rarely ever used because it's so difficult to achieve. And this rule says, all right, you can identify as many as you want, no limit on the value, but you need to close on 95% of the market value that you identified. And if you don't, the entire exchange fails. So it's kind of like the gambler's rule. I would not encourage you to use this rule without consulting me, because it could have your entire exchange fail. So you've got the 3 property, 200%, and 95% exception.
All right, gotcha. So for the one thing that I'm really interested in is the 3 property rule. You can change that however many times you want within the 45 days.
All the rules, you can change your list. You could annoy me every other day and say, we're changing the list again. We're changing the list again. But come midnight, day 45, that list has to be accurate, and it cannot change after that.
Okay, so my follow-up question with that is, what happens if you kind of miss that?
You pay taxes.
Oh, so that's it.
That's it. So say day 10, you sent me 3 properties. You're like, oh, those don't work. I want to get rid of these 3. And here's another 3. So you revoke them in writing and give me another 3. And that can happen as often as you want. But come midnight, day 45, you can't change the list anymore. So if come day 57 or whatever, it doesn't work for any of the properties, you're paying taxes.
Gotcha. All right. So obviously the benefits of going through a 1031 exchange is deferring capital gains, right?
Well, You see, that's interesting that you mentioned that. I gave a class earlier today, and I asked the entire class, okay, why do you guys think we do 1031 exchanges? And all of them said, oh, to not pay taxes, avoid taxes, defer taxes. And I told them that's not why you do a 1031 exchange. If you don't want to pay tax, you don't sell the property. You do a 1031 exchange because this is an underperforming asset for whatever the reason may be. Maybe you're subject to rent control. Maybe you could get better cash flow somewhere else. Maybe you could get more different properties in a different state or multiple properties in the same state. Maybe you ran out of depreciation and you want a new depreciation schedule. Maybe you want to buy that dream home that you rent first and move into second. There are so many reasons. Now, the reason why my wife and I did our 1031 exchanges, we just got tired of the tenants, trash, toilets, termites, taxes, because being a landlord for some people, if you get the wrong tenants, it's very stressful, and you could 1031 exchange into assets that are completely passive. So yes, a big benefit is not paying the taxes, deferring the taxes. But the real reason people do exchanges is because that property just doesn't work anymore for whatever the reason is. And a lot of the time it's because you hate being a landlord now, or you want better cash flow, or you think you can get better appreciation somewhere, or you want to go from this product to that product, different property types, all kinds of stuff.
Gotcha. All right. So what happens if this person that owns all these investment properties, they pass away? Then what
That's
happens?
great news. Not for the family, but for the beneficiaries, because when you die, the basis is stepped up and the gains are forgiven. So what I'd recommend, particularly in the state of California, is anybody that passes away, whoever inherits the property, it's probably the best time to sell, especially if there's multiple beneficiaries, because you're probably never going to agree with your brother, sister, or friends if you inherit with anybody else of what to do with the property. So it's probably best to unload the property at that point. There will be no gains to realize in the majority of cases because of the step up in basis. And with Prop 19, that property will get reassessed as well. So the numbers will change. You have the opportunity to cash out without paying anybody capital gains tax. So it's a really unique opportunity. The motto for 1031 exchange is buy till you die, swap till you drop, because that gets rid of that gain responsibility. And so, like, for us, we are going to continue to exchange, get better cash flow. And when we pass away, our daughter is I'm already going to tell her, I go, when we pass, sell it, take the money, invest in what's more wise for you guys. And you're not obligated to keep the property. Right now, you could sell it without paying capital gains tax because the step up in basis. So it's a great strategy. Death in real estate works well for the beneficiaries.
That's really good to know. I did not know that. So we're coming up to our 20-minute mark here. What other key things would you say that people need to know about 1031 exchange that we have not covered today?
Well, I just want to reiterate some of the things that we did cover. You really need to plan ahead in a 1031 exchange. Maybe look at the return on the investment of your current property, especially if you don't like it. And if there's something better out there, then you should consider the 1031 exchange. If not, just keep your property till the time is right. I don't like doing exchanges that don't make sense. I like doing exchanges that do make sense. You want to know the rules and guidelines, and it's very much about timing. You don't want to go on Google to get answers because things change all the time. I am the resource that keeps up to date with all the 1031 exchange information. I'd love to help all of you out. There are certain things that we don't have time to go into in depth about today, but there are ways to buy first and sell second. It's a reverse exchange. There are ways to use some of the money to improve the property that you're going to be buying. It's an improvement exchange. If these things are something that you're considering, let me know. I'm more than happy to answer questions. And if it's a fit, love to help. If it's not a fit, doesn't matter. It's about answering questions and sorting out situations and seeing what works best for you as an investor.
Awesome. And how can people reach you, James? What's the best way to reach you?
Well, my phone number is on the screen. And that's my direct line. That's my cell phone number, 415-640-0794. But you could text that number. You can call me on that number, or you can email me. My email address is not up here, but it's my first name, James, period, my last name, Callejas, at ipx1031.com. So everything's up on the screen right there. You just need to put a period between my first and last name, then the @ sign, then the IPX1031, and then a .com.
Yeah.
Happy to help anybody that does just needs some questions answered.
Absolutely. Do you have any social media people can follow you at?
I'm on Instagram, on Facebook. You can always just add me there. And if anybody really liked this, I could always use more social media presence. Please give me a positive Google review. I need them. I need them.
It's always a good thing to have.
It is. It really
You never
is.
get too many of them.
No, and our company says, yeah, I don't have enough, so I could really use it.
Yeah, we can help you out with that.
Yeah, I just don't ask for them. And now they tell me you have to ask, or people aren't going to just automatically do it, and that makes sense.
Yeah, I'm sure you'll get a lot of them too. You've done a great job for everybody that they've been had an experience working with you.
I try to do my best every time.
James, thank you for joining our live stream today. I really appreciate it.
My pleasure. Great to talk in front of you and everybody that joined us today.
All right, you have a good one.
Okay, take it easy.
You too. Bye-bye.
Bye-bye.